Dirk Becker. He's a financial analyst at Kepler Capital Markets, joins us live now from Frankfurt. And Dirk, what was the big focus for you with these earnings?
Well, yeah, I tried to find out what the underlying earnings really were, and when you drill into this, then this 8-point-something%, which they state as net ROE, comes down to just above 5%, and I think this is really disappointing, and it's mainly a function of very poor performance in the investment bank. I think the other divisions have probably performed more or less okay, but the investment bank is really the big problem for them, and we've seen already a similar thing for UBS, and this seems to be a recurrent feature now.
A recurrent feature, and we're seeing already UBS, its investment banking strategy is under review, isn't it? We're hearing about a shrinking down of their investment banking operations. How is Credit Suisse likely to adjust to this? How difficult is it going to be for this division to recover, if you like?
Yeah, well, I think Credit Suisse will more or less follow the UBS strategy. Maybe the announcement is a bit less spectacular than what UBS is planning with its Investor Day later in November, but they are doing exactly the same thing. They are reducing sharply their risk-weighted assets in fixed income. Fixed income, unfortunately, drives probably like 2/3 of the global investment banking revenues, and Credit Suisse is reducing its business and its efforts there. So it's becoming very clearly just a niche player in some selective parts of investment banking, in some parts where they might be good, but they are just dropping out of the bulge bracket, and I think this is a bad thing for them long term. If they want to be recognized as a leading investment bank, this will no longer work.
Dirk, I spoke with Brody Dugan a great deal about capital requirements, about a very fluid, changing regulatory environment, if you like, because you've got Basel III, you've got the European Banking Authority, and then, of course, for Swiss banks, you have the Swiss regulators coming down particularly hard, don't you? They want their banks to raise more capital. They want them to do it faster than other banks. So Swiss banks arguably coming under more pressure than their European counterparts. I'm just wondering how that is going to shape these banks in years from now. Do we have to get used to an industry that is perhaps less profitable?
Well, yeah, I think that's something that has been coming for a long time, and for the Swiss banks, this is absolutely the biggest problem. If they want to keep their return on equity on historic levels, they just need to probably more or less withdraw from large parts of investment banking. So everything which requires capital will become very unattractive, very uneconomic for the Swiss banks, and that's what we're seeing for UBS and for Credit Suisse. For them, it just doesn't make any sense to stay in large parts of investment banking and in fixed income. For the other European banks, it's probably a little less onerous. The capital rules of Basel III will also reduce the structural returns, but not as much as for the Swiss banks.
All right, well, thank you very much indeed, Dirk Kepler, their financial analyst from Kepler Capital Markets. Good to talk to you.